If your rent is already $1,500, why not trade up and own the place instead? I'm not talking about fantasy math or manifesting a mansion. I mean real simple numbers to figure out how much house you can actually afford without blowing up your budget. Too many people get hung up on home price. $300K, that's way too much for that house. But when you're looking at homes, your monthly payment might actually be close to identical to what you pay in rent. So let's flip the script. This isn't just about buying a home, it's about upgrading your lifestyle. Quick reminder, it's your guy Huddy, 26 years deep in the mortgage business, loving it and still going strong. Most people think price is the main issue, but that's not really it at all. It's your monthly payment that makes or breaks affordability. A mortgage payment includes the principal and interest, property taxes, homeowner's insurance, mortgage insurance for most loans, and if you're in a townhome or a condo, some single family homes have what's called an HOA or a homeowners association fee. So when we say how much house can I really afford, what we're really saying is what's the payment and how much stress is that gonna cause me? I don't like the stress, so here's a simple trick you can do to actually find out how much home you can really afford. It's a simple trick, been using it for years. It's like a rent trade-up test. It's real basic. Take your current rent and add $300 or $400 each and every single month. Then we back that into a home price kind of based on current rates, not fantasy rates. A quick example is if you're paying $1,400 a month in rent, that's someone that could comfortably handle $1,600, $1,700, $1,800 a month if it was a mortgage payment. That $1,700 or $1,800 a month payment, that's actually a $230,000 to $260,000 home, depending on where you live. We do have to account for property taxes and homeowners insurance. And if you've watched any of my other videos, you could easily do a live and flip or get yourself a roommate to make that even more affordable. One thing you have to be aware of is what lenders look at. Of course, we look at credit, but we're also looking at what's called your debt to income ratio. And I know some of you have already heard of that, but here's a little bit more detail of what we're actually looking at. What I'm referring to in this video, it's called your back end debt to income ratio. We're looking at a proposed mortgage payment, but then we're adding your bills into that equation. I'm talking about things that report to your credit. So car loans, student loans, credit cards. Anything that reports to your credit. It's not your car insurance, your cell phone bill. It's not that stuff. Only the items that count against your income, car payments, student loans, credit cards. So in theory, if your gross income, not the amount that gets deposited into your checking account on Friday, your gross income, if it's $5,000, we times that by 50% because that's roughly kind of what we're going to use for debt to income, anywhere from 45 to 50. So you take your gross, you times it by 50%, and then deduct your monthly bills, your car payments, your credit cards, your student loans. So in a little scenario, if you're making $5,000 a month, divide that by 2, you're at $2,500, subtract a car payment, maybe a credit card. So now maybe the monthly payment you can afford is $1,800 or $1,900. And again, that could be $230 to $260, maybe even more for a house that you could own and build equity. What I want you to do next is take this challenge. I want you to take what you pay for rent and add $200 or $300 on top of that. Then we just need to figure out, okay, what's that payment? And if I were to trade up and own, what would that really get me? If you don't want to do the math, no problem. Just DM me your scenario and I'll break it down for you. No pressure, no nothing. I'm just going to shoot you back the number. I want you to have clarity so that you understand this. And I'm keeping things basic because we're going to graduate up to a more complex class down the road. A quick practice test that I tell people to do, if your rent is $1,500, give yourself a $300 raise, meaning pay your rent and on the same day, put $300 in your savings account and do that for 3 months to test drive a potential mortgage payment. In the next video, we're gonna break down how people are buying homes with only $1,000 down. Cool case study. My son actually did it at the age of 20. So that's the next video. We'll see you there.